created Tesla to make a difference in the world.
Released this week show Tesla car sales in Europe were down 45% in January.
Today, protesters demonstrated outside Tesla dealerships to share their wrath at the...
For years, Tesla was untouchable. The company that changed the way we think about cars, that made electric vehicles cool, is now in serious trouble. Sales are down, the stock is crashing, competitors are closing in. Elon Musk, distracted. And the once loyal Tesla fan base, turning against the brand. So what happened? How did Tesla go from the leader of the EV revolution to a company struggling to keep its dominance? Buckle up, because this is the full story. Tesla's sales slump isn't just a bad quarter, it's a global trend. In the first quarter of 2024, Tesla reported one of its worst performances in years, missing delivery expectations by a significant margin. In the United States, Tesla showrooms are seeing lower traffic, and inventory is piling up as demand weakens. More concerning, however, is that this problem isn't limited to one region. In China, which has long been one of Tesla's most profitable markets, the company has been overtaken by BYD, a Chinese EV giant that is now the world's largest EV manufacturer. Meanwhile, in Europe, traditional automakers like Volkswagen, BMW, and Hyundai Kia have aggressively pushed their own EVs, successfully eating into Tesla's market share. For years, Tesla benefited from being the only real option in the EV space. If you wanted an electric car that was fast, had long range, and came with cutting-edge technology, Tesla was the only choice. But now, customers have more alternatives than ever. With better options available, Tesla is no longer the default choice for EV buyers. To fight the slowdown in demand, Tesla did something unprecedented. It started slashing prices. The company lowered the cost of its Model 3, Model Y, and other vehicles by as much as 20% in some markets, hoping to attract more buyers. But instead of increasing demand, these price cuts created new problems. First, existing Tesla owners were furious. Many had purchased their cars at higher prices, only to see the same models being sold for thousands of dollars less within months. This severely damaged Tesla's resale values, making it an unattractive option for potential buyers who feared their cars would depreciate too quickly. Second, the constant price reductions trained customers to wait for even lower prices. Why buy a Tesla today if there's a good chance the price will drop again next month? This created a hesitation effect which further hurt sales. And third, these aggressive price cuts shrunk Tesla's profit margins. Unlike budget automakers that rely on high-volume, low-margin sales, Tesla has historically depended on strong profit margins to sustain its business. Slashing prices was a short-term fix with long-term consequences. Tesla's biggest challenge isn't coming from the United States or Europe. It's coming from China, where local automakers have rapidly gained dominance. The most significant competitor is BYD, which has now surpassed Tesla to become the world's largest EV manufacturer. The biggest reason? Price and government support. In China, a Tesla Model 3 starts at around $35,000. A BYD Dolphin EV? Just $12,000. The price difference is staggering. For many Chinese buyers, the decision is simple: why pay 3 times as much for a Tesla when you can get a well-equipped EV for far less? Even Elon Musk has admitted that Chinese automakers are scary good. In a price war, he said, they will win. That price war has already begun, and Tesla is struggling to compete. Tesla was once the only serious option in the EV space, but that's no longer the case. Legacy automakers who were slow to embrace electric cars have now fully committed to the transition. Companies like Ford, General Motors, Volkswagen, Hyundai, and Kia are now producing high-quality EVs that rival or even surpass Tesla's offerings. Take Ford's F-150 Lightning, for example. It has dominated the electric truck market, cutting into Tesla's potential customer base for the long-awaited Cybertruck. In Europe, Volkswagen's ID series and Hyundai's Ioniq models are proving to be massive hits. Meanwhile, premium EV startups like Rivian and Lucid are offering better interiors and more luxurious features, making Tesla's vehicles feel outdated in comparison. The real issue? Tesla hasn't launched a truly new vehicle since the Model Y in 2020. Meanwhile, its competitors are launching fresh, innovative models every single year. Beyond sales and competition, Tesla is facing a major reputation crisis. The company was once known for having an extremely loyal fan base, but that loyalty is fading. The main reasons Tesla has faced multiple recalls, from autopilot failures to steering and braking issues. Many Tesla owners report long wait times for repairs and limited service availability. With Musk focusing on Twitter X, SpaceX, Neuralink, and the Boring Company, many believe Tesla is no longer his priority. Longtime Tesla customers are starting to lose patience. If this trend continues, Tesla could face a mass exodus of buyers to competitors that offer better reliability and service. While Tesla's competition is gaining ground, the company is also dealing with internal challenges that are hurting its ability to keep up. One of the biggest issues? Production and supply chain struggles. Tesla has been expanding rapidly, opening gigafactories in Berlin, Texas, and China, but scaling up production has been harder than expected. Supply chain disruptions, material shortages, and unexpected factory shutdowns have repeatedly delayed deliveries and frustrated customers. In early 2024, Tesla was forced to pause production at its Shanghai Gigafactory due to supply chain bottlenecks, causing delivery delays in its most critical market. Another issue is Tesla's unique approach to manufacturing. Unlike traditional automakers that rely on multiple suppliers, Tesla produces many of its own components in-house. This gives the company more control, but it also makes it vulnerable. If one part of the supply chain breaks down, the entire operation is affected. Additionally, Tesla has been struggling to ramp up production for its next-generation vehicles, including the Cybertruck and the rumored $25,000 budget EV. Customers who placed reservations years ago are still waiting for deliveries, and many are losing patience. Meanwhile, companies like BYD, Hyundai, and Volkswagen are efficiently rolling out new EVs with minimal delays. Tesla's ability to scale production quickly and efficiently was once one of its biggest advantages. Now, with supply chain disruptions, factory bottlenecks, and increasing competition, it's becoming one of its biggest weaknesses. If Tesla can't solve these production issues, it risks falling further behind in the EV race. The Cybertruck was supposed to be Tesla's next big game changer, but it has instead become one of its biggest challenges. When first announced in 2019, it promised a futuristic design, unmatched durability, and an affordable price. Fast forward to today, and reality looks very different. The Cybertruck is much more expensive than originally promised. Production delays mean that most buyers won't see their trucks for years. The design, while unique, has questionable practicality compared to traditional trucks. With competition from the Ford Lightning, Rivian R1T, and Chevrolet Silverado EV, the Cybertruck is no longer the only option in the electric truck space. Tesla's stock price has always been volatile, but in 2024, it's taking a serious hit. Many investors who once believed Tesla would dominate the EV market indefinitely are now questioning whether its best days are behind it. Some analysts have downgraded Tesla's stock, warning that slowing growth, shrinking margins, and rising competition could limit its long-term potential. Tesla has long positioned itself as not just a car company, but a technology company. Unlike traditional automakers, Tesla's vehicles are software-driven, receiving over-the-air updates that promise improvements over time. In theory, this is a game changer. In reality, it's starting to backfire. Tesla's autopilot and full self-driving FSD features, which were once seen as cutting edge, are now the subject of government investigations and lawsuits. Multiple crashes involving Tesla's driver assist technology have raised concerns about safety and reliability. Regulators have pushed back, forcing Tesla to recall thousands of vehicles over software flaws. And then there's the user experience. Many Tesla owners have complained about software bugs, from unresponsive touchscreens to faulty climate controls and camera malfunctions. Unlike a smartphone, a glitchy car can put lives at risk. Customers who once praised Tesla for its tech-driven approach are now looking elsewhere for more stable, refined systems. Meanwhile, competitors like Mercedes-Benz, BMW, and even Ford have introduced Level 3 autonomous driving technology, which in some cases outperforms Tesla's full self-driving. Tesla's once unmatched technology is now losing ground, making it harder to justify its premium pricing. If Tesla can't deliver a truly safe, fully autonomous vehicle soon, customers may lose confidence in the brand altogether. Despite all these challenges, Tesla isn't done yet. The company is still working on new models, expanding its factories, and developing a next-generation $25,000 EV that could be a game-changer. However, Tesla must move fast. The competition is relentless, and the EV market is evolving quickly. Tesla isn't dead, but its dominance is no longer guaranteed. If it doesn't fix its pricing strategy, improve customer service, and out-innovate its competitors, it could lose the very market it helped create. What do you think? Is Tesla still the leader in EVs, or are we witnessing the fall of an empire? Comment below. If you found this analysis valuable, don't forget to like, subscribe, and hit the bell for more deep dives into tech and business.